Good morning, good afternoon, whatever it is, wherever you are. Welcome to the latest in our Finance for Expats webinar series. Today we're covering financial planning for US expats living outside of the US. So today's webinar will be presented by Melissa Eugenio, VP of Operations at Alexander Beard in the US. US expats living and working abroad face many issues to manage their investments in pensions, and the session will help you to plan your finance and to avoid unnecessary tax and costs. The session will look at FATCA and the risks that investments held in offshore or non-US qualified investment funds may face significant taxation. It will also look at the risks of not declaring local investment funds built up abroad and the options for handling your foreign pension fund benefit on return to America. So before we start, just say that if you have any questions, please use the button on your screen to send any questions to us. We'll answer them at the end of Melissa's presentation. Anything we do not cover, we'll answer by email after the webinar. If you want to contact us with any questions related to this webinar or any other issues to do with your life abroad, you can contact us at expats@expatnetwork.com. So that's enough from me. By the way, I'm Nigel Ayres, who leads Expat Network. So over to you, Melissa.
Thank you very much, Nigel. Good afternoon, good evening to our audience out there. As Nigel introduced me, I'm Melissa Eugenio. I represent the Alexander Beard U.S. operations. I am an investment advisor, as well as I'm in charge of running the U.S. operations. And I'm going to do a broad brush of the U.S. retirement programs. I think that's going to be our primary focus. Let me go ahead and launch my screen for you. And I'll talk about a special alert, couple different alerts that are going on within the U.S. with the investment products here. So here we go. Okay, so here we go. So this is a broad brush really on the U.S. retirement programs. As I mentioned, there are two principal retirement vehicles are qualified retirement plans. So if you have started your career in the United States and then moved on, you may have a 401k or 403b plan sitting left behind here in the US, but these are employer sponsored plans. As you may know, they are mostly employee contributory, which means you contribute your dollars into the plan. And if the plan allows for the employer contribution, those are typically written into as discretionary contributions, and either a matching or a profit sharing contribution could be applied to the plan. So these plans can sit alone. They can sit for as long as you want them to be there until you actually take action and request a distribution. The other major retirement savings vehicle are individual retirement accounts, and there's three types of accounts that you can have. You can set up a traditional IRA or a Roth, and the difference between the two is that traditional IRAs are pre-tax contributions. So this is usually when you're filling out your taxes and you can put in a contribution into your IRA to receive a tax deduction. The critical piece here with the traditional IRA is that you must have earned income. I want to highlight here that we're not tax experts, and we can certainly connect with Nigel and his team to find a local contact if that's the case. But I just wanted to point that out there, that you must have earned income, and it does not have to be in the United States. If you are a taxpayer still in the United States, which many US expats are, then you have this as an option. The other option is the Roth, and this is also where you must have earned income to place into and contribute to the Roth, and this is comprised primarily of after-tax contributions. These contributions will just grow on an after-tax basis until you withdraw them. There is a note here about rollover IRAs, and these are permitted. So let's say you have a 401k account or a 403b, and you would actually like to manage those a little bit more actively than leaving them behind in your former employer's plan. You have the option to transfer the assets. And the good thing about the rollover IRA is that you keep the tax deferred status of those assets, meaning if you roll them in, you don't pay the taxes, you just continue to defer payment until you're ready to take it upon retirement. So a couple things. You leave the country, you're going to terminate employment with your current employer. What do you do with your plan? And the couple items here, there's 4 things that you can actually do with the plan. You can never be forced out of a 401k or 403b. So I want to note that. However, the one exception, as there always seems to be an exception to these rules in the US, is if there is a company action, a corporate action such as a merger, acquisition, and it or bankruptcy. And I think the bankruptcy is going to be the main reason why you'll be forced out of a plan. But for the most part, these assets should remain in a plan until you do something about them. But what you can do is move these assets to your new employer. If you come back to the United States, you've worked abroad for a number of years and you remember, oh yes, I have this former plan, I want to roll it in. It's not a problem to transfer those assets. Another thing, as I touched upon on the previous slide, is to transfer your assets to a rollover IRA. Because you're outside the United States, you'll have to work with an advisor because we have partnerships with vendors that can offer rollover IRAs for folks that don't have a US address or don't have a US bank account. So we can certainly help you manage this IRA. You can choose to leave your account where it is, and you leave it up to the employer to conduct the fiduciary and investment oversight of the portfolio. And then lastly, the option to withdraw the assets, that is, again, your call. If you've reached the normal retirement age, this is all written into the plan document. It may not be age 55, it may not be 65, it may be 67. Every plan document out there is different. So once you reach the plan's defined normal retirement age, you may take your first qualified distribution from the plan. Perfectly fine to do so earlier in the next bullet slide. If you are under age 59 and a half, I just wanted to say you are going to be assessed a 10% early withdrawal penalty fee. And then the IRS will automatically withhold 20% of your total assets and reserve that for your tax payment in the following year, in April of the following year. Once you withdraw the assets, these now become after-tax dollars. You lose the tax-deferred status of these dollars. And again, any distribution that you receive from a U.S. plan is going to be subject to taxation as ordinary income within your marginal tax rate. I wanted to highlight Social Security because a lot of folks that leave the country and they don't realize, oh, I have Social Security coming to me. It's nice to know that this is available. We are subject, all U.S. workers are subject to 6.2% tax. Your employer will also contribute 6.2% towards the Social Security Trust Fund. All those dollars and taxes are applied to the trust fund, and they essentially will grow within the program. And hopefully, there's been discussions about Social Security possibly going bankrupt, and we hope that's not the case, but we also understand that there are going to be some significant changes to this program. To be eligible, you must have worked a minimum of 10 years in the United States. So you get credits. For every quarter, that's 1 credit. So you need to have a minimum of 40 credits, which is the equivalent of 10 years to qualify for a Social Security benefit. And the normal retirement age here in the US for many of us is 67. The program will allow you to take early retirement at age 62, but know that the benefit is reduced by 25% overall. So from your maximum benefit to what you receive at age 62, you're going to have a 25% haircut there. There is an option to go ahead and stop that early retirement if you wanted to within a year, but you have to pay back all the benefit payments made to you within that 1-year period. And just to let you know, Social Security is indexed. The last increase for this year actually was announced in December, 5.9%. So pretty significant there, although it doesn't seem like it's enough to keep up with the inflation that we're seeing these days. Also, to let you know, you have the option to set up your own Social Security account. Some of you may or may not have started to receive statements on a regular basis. Most people prefer to do business online, so you're welcome to set up your account, see where your earnings are at, see what your potential benefit will be. So it's nice to have your hands on that, and definitely go in. Doesn't cost anything to set up your account. The alert that I have is really going to target those folks that are non-residents and have IRAs left behind here in the United States. It's come to our attention in the last 4 to 5 years that there are a number of brokerage houses that are freezing their international accounts, and some of them have actually made the move to close them. So the ones that I've listed here, Morgan Stanley, Merrill Lynch, UBS, and Wells Fargo, they have definitely made strides to close their international accounts. So anyone that is a U.S. citizen that no longer lives in the United States and has a foreign address, they've gone in and they've targeted our international accounts and they're starting to close them. So I know Wells Fargo started this in earnest in 2021. So we've had a number of requests, and they're doing it in tranches. So through fourth quarter, I had 3 requests to be able to transfer their assets out elsewhere. Otherwise, they're either frozen, meaning you don't have access to your accounts, or you basically have limited access to what you can invest in. And a lot of the reasons for it, the closing of these accounts, is the increase in the US regulations and the compliance risks. And they're concerned, these banks are concerned about the impact on the rest of their businesses, such as commercial banking and all that. So that's a big deal. The other reason is because in 2018, the Eurozone came out with some additional reporting requirements for these types of investments, and because the US doesn't comply, that's where these companies have said, listen, we don't comply, we don't want to be out of compliance to risk our business models and business profiles, let's remove this business from our book. So that's what they've done. It's unfortunate because I've had people come to me and say, listen, I moved my money out of this one fund and they're not allowing me to purchase certain funds. A lot of individuals are invested in exchange traded funds, as an example. So none of that is allowed when you're living outside the United States. And these brokerage houses have started to do that. Fidelity, T. Rowe Price, and Vanguard are 3 that I'm very well aware have limited access, individuals and their access to certain funds within the platform. Also, they may lock you out of your account altogether. If you're coming from a foreign IP address and they're able to tell that, then they won't even give you account access. So we recognize that a force out from your IRA is an issue, and it could be catastrophic if you're looking at your plan, your long-term future, they're planning. We really wanted to make sure that we help our clients kind of get through this. And we do have 3 partners. We have 1 in the UK, and we have 2 more here in the United States that we work with and partner with to set up IRAs. And it doesn't matter if you're outside the United States, but we certainly can manage to take these assets and invest them for you and maintain a financial plan for the long term. So this is essentially who we are. We were founded in '87 by Paul Beard, or the Venerable Paul Beard. Alexander Beard Group actually is headquartered out of the UK, Northern England, been around for 35 years. And Paul Beard had created a product for us mainly to attend to the needs of our UK expats that are living in the US that have left UK pensions behind. So in 2004, we started the US operations to support our clients. And of course, we built up a financial planning business as well for US residents. So we will work with folks, whether you're an expat or not, we'll work with folks. Some of the things, because we are headquartered out of the UK, the bread and butter of our business, you look at the pension transfer analysis, we will do that for folks. We do have a number of offices around the world, so we can assess pensions from that perspective. So we're in Australia, South Africa, the Netherlands, France, and here in the United States. So we can really take the time to look at the pensions and see if there's an option to either transfer. And this mainly applies to UK pensions, but we also have staff in the other countries to do the same. We look at portfolio management, specialize in UK personal pension plans, frozen UK pensions, and then SIPs, which are our self-invested personal pension plans. We offer financial planning and investment advisory services, and then US retirement plan expertise as well. So that's just a broad brush of who we are and just some of the current issues that we're dealing with in the industry, working with US expats outside the US. I put our contact information down here. Wanted to introduce Mark James. He's not on the webinar today. However, he is our dually licensed financial advisor. He is based out of our home office in the UK, but he is licensed here in the United States and the UK, so he's able to consult on UK pensions, US pensions, US 401k, anything that you have questions on relating to the UK, foreign exchange, and all that. Mark is a great go-to, a great resource for me, great source of information if you have certain questions related to pensions there. So that's pretty much my broad brush on current issues, what's going on here in the US for US expats to keep in mind.
Okay, well, thank you very much, Melissa. There's just a couple of questions come in. Firstly, one is, when I terminate employment with my US employer, how soon do I need to arrange to transfer my assets out of the 401k plan?
So you have your 401k plan, and as I mentioned earlier, you don't have to do anything with those assets. You can leave them in the plan as long as you need to. So there's no time frame for which you need to arrange a transfer of those assets. And I did explain the options for what you can do with those assets once you do leave the employer.
Okay, thanks. Another one here. As a terminated employee, can my former employer force me out of the 401k plan?
I did touch upon the force out situation, and I believe that a force out could only happen if there is a corporate action. So we look at a merger acquisition, but in those cases, we typically see 401k plans, if they're being acquired by another company, the acquired company's 401k plan would just transfer to the acquiring company's 401k. So there's nothing really to be worried about there. It's just that your plan's going to have a new name and they still can't force you out. The one area where I do see force outs, if there is a bankruptcy and the assets are safe, they're in trust and they're safe. So it's not as if the assets will go away or be part of bankruptcy proceedings. So that is the only reason why. And then you still have an option to roll the assets into a rollover IRA to maintain the qualified status of those assets.
Okay, thanks, Melissa. One more here. What options do I have to manage my US assets if my brokerage firm forces me out?
Yes, as I mentioned, Wells Fargo began this force out in earnest. So we started hearing from clients last year, started in January. And so we're starting to hear bits of information from people and actually receiving referrals from other people that have moved on out of Wells Fargo. So it's interesting to see how quickly this is happening. So as a result, we have, as I mentioned, 3 partners. We have 1 in the UK and 2 in the United States that we can actually roll assets into and maintain IRAs. And it doesn't matter whether or not you live here in the United States or outside the United States, we're able to maintain those assets and manage portfolios.
Okay. Sorry, many thanks. And that's all the questions we have, Melissa. So we'll sort of call a day there. So thank you for joining us today, both Melissa and those on the audience. Before I go, I'd just like to emphasize that we're here to help you to get the best out of your life as an expat. And if there's anything we can do to help you, either to do with finances or any other aspect, then please do contact us at expats@expatnetwork.com. So thank you, everybody. Goodbye. And thank you, Melissa. Cheers.
Thank you, everyone.